Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking S&P futures. December S&Ps hit a new all-time high, the cash S&Ps as well. December S&P got up to 2506 before falling off a little bit, but essentially what we saw today, though we ended slightly higher, was a holding pattern for the S&P 500. It is not moving. It's not much movement at all. Essentially, today's close I would consider to be technically unchanged. And there's just not much scheduled on the economic calendar otherwise until Wednesday when we have an FOMC meeting. And this FOMC meeting, it commences with a 1% chance of a rate hike, according to the CME Fed Watch tool. That essentially is a 0% chance. But what we do have coming Wednesday in this FOMC meeting is a full expectation from the market that the Fed is going to announce and commence with balance sheet normalization, which essentially means they're going to take the maturing assets. They're no longer going to take the cash from those assets and reinvest them in similar assets. That cash is going back to the Treasury, and so the Fed will be buying fewer and fewer assets, potentially creating a little bit of a sell-off and a little bit higher yields. Hasn't happened yet. Yields haven't moved. Now, again, that new high is a new all-time high, so that happened off of the open, and then really the rest of it kind of came off. We saw that new all-time high coming off of reduced geopolitical tensions. And at this stage, reduced geopolitical tensions just means no additional political tensions. There hasn't been any improvement in the situation between the U.S. and North Korea. But we also saw dollar strength. We saw a little bit of a rebound in the dollar index. We saw individual rebounds versus the yen, versus the euro, and versus the sterling. So that's where that new high came from. You combine those two things, and when you combine sort of the synchronized geographic, or rather global growth that we have, and if there's nothing happening, the S&P is going to tend to track a little bit higher. Now, tomorrow morning, we've got a potential for an inflammation of those geopolitical risks with Donald Trump speaking at the UN. President Donald Trump will speak to the 193-member contingency at the UN and discuss things like North Korea. That's probably going to be a major part of his speech, and try and convince the UN to back stiffer yet sanctions against North Korea. So you could theoretically imagine that there'll be some sort of response, whether verbal or otherwise, from North Korea after the speech is finished. So there's probably going to be some inflammatory language, some really tough talk out of the president speaking to the UN. It's the first time he's addressing the UN, at least the full contingent. Again, 193 members, first time he's speaking in front of all of them. So we expect this to be a fiery speech. Still is not as important to the markets as what we've got happening on Wednesday. This is Bob Iaccino talking S&P futures from the CME Group trading floor in Chicago.